Welcome back to Frontline News. I'm Sasha Lee Hamilton. It's now time for Frontline Business. The Planning Institute of Jamaica, PIOJ, is reporting that 2019 was another year of relatively flat growth. Carrie Simpson has the details in this report.
Director General of the Planning Institute of Jamaica, PIOJ, Dr. Wayne Henry, says Jamaica experienced relatively flat growth in 2019. He made the disclosure during Tuesday's quarterly media briefing.
For calendar year 2019, real GDP is estimated to have grown by 0.9%. This represents the 7th consecutive year of GDP growth.
Jamaica has achieved 20 consecutive quarters of economic growth, but the actual numbers also tell another story. They show that economic growth has remained largely subdued. For example, the highest quarterly growth last year was 2% recorded in the fourth quarter. It also explains why the annual growth rate has averaged about 1% over the last decade. Last year's lower than expected growth resulted from obstacles like the closure of the Giscom Alpart plant and the unfavorable conditions in the agricultural sector. Dr. Henry admits that those challenges are likely to continue.
Growth, however, is expected to be stymied by a continued decline in the mining and quarrying industry, reflecting the temporary closure of Alpart for the next 15 to 21 months. We expect real GDP for the January to March 2020 quarter to grow within the range of 0 to 1%. The growth in real GDP for fiscal year 2019-2020 is also projected to be within the range of 0 to 1%.
Carrie Simpson, Frontline Business.
In the meantime, the parliamentary opposition is warning that there could be significant fallout in the tourism sector as the coronavirus outbreak spreads to several countries. And concern is mounting about the effects of the coronavirus outbreak on the global economy. Global economist at JP Morgan, Joseph Lupton, says supply chains will be affected.
The longer this lasts, the more this kind of turns into supply chain disruptions, and we think of kind of nonlinear effects. For a certain while, inventories can absorb some of the hit in the U.S., but after a while, you start to run out of those inventories, and then you get real knock-on effects.
Are we hitting up against that line right now, or no?
Not yet, but forecasts keep being revised, and I'll say the China forecast just this morning, we marked ours down to -4% for the first quarter.
In Thursday's trading session, the JSE Combined Index declined by 1,198 points to close at under 500,000 units. Overall market activity resulted from trading in 82 stocks, of which 36 advanced, 37 declined, and 9 traded firm. The junior market index declined by 15 points to close at just under 3,000 units. Stocks advanced for 138 Student Living, 1834 Investments, Access Financial Services, Cargo Handlers, and Caribbean Cement. Stocks declined for 138 Student Living Variable Preference, Barita Investments, Berger Paints, Blue Power Group, and Caribbean Cream. Trading firm were Caribbean Flavors and Fragrances, Derrimon Trading, First Rock Capital Holdings, iCreate Limited, and Key Insurance. Sagicor Select Funds Limited Financial was the volume leader with 15.7 million units, followed by Mailpack Group Limited with 15.3 million units, and Wigton Wind Farm Limited ordinary shares with 6 million units. Now for the foreign exchange. Stocks across the globe and oil prices continued to tumble on Thursday, and U.S. Treasury yields hit record lows as traders fretted over the economic impact of the spreading coronavirus. Brent crude futures fell 2.2% to $52.27 a barrel. West Texas Intermediate WTI crude futures dropped 2.8% to $47.36 a barrel. And that's it for Frontline Business. I'm Sasha Lee Hamilton. Pleasant viewing.